Hello, Rafi Sosikian here, welcome. Today is Thursday, September 29th, 2022. Yesterday I made a video discussing how the VIX has us in a position where special operations would be ideal in my opinion, at a time where there is extreme volatility. Today we have continuation from yesterday's price action, where yesterday was a green day, today was a red day, but to a day trader, particularly a systematic day trader, we don't really care as to which direction it goes as long as we can take advantage of the volatility, and special operations within Price Action Harvester Automated version 5 does that for you. So in case somebody is not familiar with this platform, I am in NinjaTrader 8. This is Strategy Analyzer, which is a backtesting tool within NinjaTrader 8. And I've loaded my strategy here, Price Action Harvester Automated version 5. And I'm going to continue on yesterday's thought in the video that I shot yesterday and uploaded yesterday to YouTube. And I'll put a link to that video in this one as well, where I discussed a bread basket, okay, where I have 6 different instruments that I'm running a backtest on, concurrently using Strategy Analyzer here. So that's the diversity basket. Let me go over that again, just in case somebody missed that. So let's go over the diversity basket. You'll notice there are 6 instruments in here. We have ES to SPOOs, gold, copper, silver, YM, ZB. So that's copper, that's silver, YM is Dow, ZB is the bond futures. These instruments, with the exception of the SPOOs and copper, which are $12.50 a tick, the rest are different tick values. So GC is gold at $10, silver is $25 a tick, YM, the Dow, that's $5 a tick. ZB is the most expensive at $31.25 a tick. Okay, so I am going to run this back test for all 6 just for the sake of speed. So we go, as fast as possible here in this video, and you get the most out of this video. So for the risk per trade, I'm going to use 18 for all of them. So one can argue 18 might not be enough for YM, which is only $5 a tick, which means we're taking $90 worth of risk per trade. And it may be a lot for something like ZB, which is 31.25. But just for the sake of argument, I'm just going to run it all with this risk per trade, and I'll do various numbers as well. So I'll change this up for you. So in yesterday's, I did not discuss modulate break even, and I did not discuss move stop. So in yesterday's example, it was just price target, risk per trade, flatten everything. Okay, so those were the exits in essence. The exit was either we hit the profit target, we hit the stop, or we get flattened out at 12:59. Again, I'm in Los Angeles, so I'm in Pacific Standard Time. So these are all Pacific Standard Time. So I have the exit here at 1 minute before RTH close. Of course, all these fields are editable. This is a self-directed system. So money management, I have $5,000 as my net session profit limit. I have $500 as my net session loss limit. So if the net number here is up, so when the trades are flat, at the close of a bar, the system calculates everything every 60 seconds. Okay, guys, so at the close of each bar, everything is calculated for you. It's checking to see if you're up $5,000 or more. If you are, then it's going to stop looking for further trades. Conversely, if you're down $500 because of this parameter, net session loss limit, then it's going to stop looking for further trades. And finally, if you have 4 consecutive losing trades, it's going to stop looking for further trades. So for modulate break even, what have I done here? So I've got that enabled. And I'm saying if the trade that the system is in is up by 35 ticks or more, then we want to move the stop, which is this parameter here, risk per trade. So we want to move the stop from 18 ticks to break even plus the 4 is the X there. So break even plus 4. And we only are doing that in this example if the price moves against us. So it doesn't move it to break even unless it confirms price has moved against your trade. Okay, and I also have move stop enabled. What is this saying? So this is basically expressing for the system, since it's enabled, if we've been in the trade or the system has been in the trade for 15 minutes or more. It says starting bar 15. We're trading the 1 minute bar, so 15 minutes or more, and the trade that you're in has an unrealized profit of 54 ticks or more, and price has moved against you, then it's going to move the stop if you're in a long trade to the current bid price, if you're in a short trade to the current ask price, effectively taking you out of the trade. The profit target is a big number here at 700 ticks. And then I have the stop at 18 ticks. So let's go ahead and run it. Again, this is just for Thursday, and let's see what we're going to get. So I am going to do various different tests for you. And this time in this video, I'm going to test NQ2 because that is the most volatile instrument. So it would be good for us to test that one as well. Let's see what we got. So let me move this down for you. Okay. So using these parameters, that is the combined result right there. Okay. That's the combined result. So we have 2313, those are your ratios, numbers, etc. Your average losing trade to the average trade versus the average winning trade using this defensive setup here. Okay, so you as a trader, you can determine what your risk to reward ratio is going to be. You can determine your risk profile. Okay, so let's do some tests here. Let's say we decided not to use break even, and we didn't want to use move stop either. What are the results going to be then? So basically what we're saying is we're only going off of 3 potential exits: profit target, stop, or flatten everything. Okay, those are the 3 exits. So let's run it again and see what happens. You'll see on the bottom here, iteration 2 out of 6. So Strategy Analyzer is running everything for us instead of having to load one at a time. Load these instruments one at a time, which you can easily do by adding various tabs, but this is a little bit faster. And so this is 2698. So technically the combined results for this basket of trades actually improved a little bit. Okay, so you'll notice that all of the trades were long trades in this example. So you have 10 trades and they were all there. So in that example, that's what happened. We had more trades, as you would imagine, when, let me just run it again so you don't have to rewind or anything. So we had more trades when we were being more careful with the trades. Okay, what does that mean, careful? So I'm saying go in and move my stop to a break-even point here. So as you can see, the total number of trades is 21. Okay, so you had a lot more trades here. You had 10 trades in the previous example. You have 21 trades here. So if you had that, so, and by the way, since we're speaking of trades, we should also discuss commissions. So 21 times, let's assume you paid $5 a trade. You probably, most people are paying less. Some people are paying more. So that's why I never really I don't bake that into the strategy analyzer. I just say, just bear that in mind and just add the commissions. It's not going to be a big number. So this is $105. Let's subtract that from that combined result, 2313. What is that? 2208.75. So that's what you would get. Okay, so because we've already accounted for slippage here. So we've done 2 ticks, which I think is fair. So there you go. So that's what it is. So let's try some other things here. So let's say you were in the mood for more risk. Okay, let's take more risk here. What would happen if we said, okay, let's leave the break even in place. Okay, let's leave the move stop in place, but let's go and put this at a very high, in my opinion, this is a high number, depending on which instrument you're going after. For, I think personally, this is my opinion, 50 ticks for ZB is very high. That's my view. However, 50 ticks for something like NQ or YM, that's arguable. That some might say that's a decent number. Okay, so it all depends on your instrument. It all depends on your risk tolerance. Okay, and just remember, guys, the RR ratio, that's the key here. You want the RR ratio to be set up correctly. I've seen that so many times where people in various YouTube videos, they don't even discuss their stop. They don't want to talk about it. They just want to basically sort of hide that fact that they have a stop even. Because if they showed you the stop, you'd be like, whoa, that's a crazy stop, right? Because the stop is way too high and their risk to reward ratio is inverted, okay? So instead of having a setup like this, where your profit target is much, much, much bigger than your stop, they'll do it in reverse. So the profit target would be something like, I don't know, 17 ticks, and the stop would be 50, okay? That would be a bad idea in my opinion, okay? You have to decide. Please run your own hypothetical backtest as I'm doing here, but just in my experience, that's a very bad idea in my view. All right, so you want, this is the proper type of, it doesn't have to be this number, but my point is the reward should be multiple times bigger. At least I would say 1.5, but as much as 7, 10, 20 times bigger, depending on which instrument you're trading, depending on the day, depending on the VIX, etc. And so here in this example, I'm going to run 50. This is a high number depending on which instrument you're running, but I just want to give you an idea of what happens to these results, okay, when we run it like this. So let's wait for it to load here. It's going to run the various iterations. And once it does, it's going to load it here. So as it's doing that, I almost feel like playing some sort of a Jeopardy tune, but I'm not, because I'll probably get some sort of a copyright strike. I don't know. And so I'm not going to do that. Let's go ahead and make sure that I even run it. Oh, apparently I didn't run it. My bad, guys. So, but just to show you that I'm doing this in one shot. Okay, there's no editing here. I wish I had time to edit stuff more than I do. I usually put annotations in the video, but that's pretty much all the time that I have. So that is 55.41. So that is significantly higher. We have basically the only product, or rather instrument, that took any losses was this one. Ultimately, it's up total net profit, but it looks like its win rate was 37. I'm sorry, I missed this one too. ES had 5 trades, 4 of them were winners. Okay, so combined results, there you have it, 68.42% profit. But personally, guys, I don't care at all about that number. Okay, I care much more about you know, your average win to your average loss. Okay, that's my average winning trade, that's my average losing trade. Even at a very high, in my opinion, 50 ticks, because I have 700 ticks there as the profit target, then you know, the way I've set up the trade, even for example with the move stop, you'll notice the move stop right here. It says if it's, well, it's expressing that if it's profitable by at least 54 ticks in profit, which is higher than my stop still. Okay, so this is saying with wait 15 minutes at least, and then if you're up 50, and if prices moved against you, then move the stop. But I still have a bigger than 1-to-1, so I'm good with that RR, that risk reward. So that's 55.41. Okay, so that's just to give you an idea. Now I'd like to test NQ. So I had loaded NQ in this one. All right, so this is still Thursday. I'm still checking. Now we need to change this so that we only get today. We don't use special operations always, but I mean, we're getting back-to-back VIX wild days, so why not take advantage of it with special operations? So let's make sure we have slippage. We do. And let's make sure we have NQ, which we need to select now. Futures, NQ. All right, so I have this at 450. We can put 500. It doesn't make a difference. Or I can change it back to 450. It doesn't matter. I'm going to leave this at 2 because now we're doing one instrument only. It's NQ. This is the most volatile one. So some people will put 10 here. It all depends, guys. It all depends on what you want, what your risk tolerance is. So so we're running all day. Okay, now when the VIX is high, I should say this for any day that the VIX is high. Generally speaking, please note, generally speaking, and in my opinion, when the VIX is high and moving higher, or if, let's say, when I say high, let's quantify that. It's above 25, let's say, and it's, you know, alternating. Let's say it's going to 27, going down to 25, going to 29, going down to 27. That's what it's doing throughout the day. Then generally speaking, and in my opinion, it's probably a better idea to pick have directional bias and have short be the directional bias. That's just my opinion. You don't have to follow that. But in this example, I'm doing it both directions. Okay, so I have no directional bias here is what I'm saying. I'm letting the strategy take over. Okay, so let's go ahead and run NQ here. So I'm gonna do a test at 30 ticks NQ. NQ's $5 a tick, so it's $150 worth of risk, and I have 150, so 5x. So my R is good at 5.1. So for every dollar I'm risking, I'm hoping for $5 worth of reward. I've done a 1-to-1 here on the profitable buy for the move stop, and for the modulate break even, I have if it's up by at least 10 ticks, we're not necessarily going to exit here, but we are moving the stop to break even plus 5 ticks. Okay, so let's go ahead and run it for Thursday for NQ, and let's see what happened for NQ. I'm not sure if it ran it or not. Let's see. I don't think it did. Why did? Oh, there. That's why. Because I need 9/29. All right. Because today is the 29th. So let's run it for for Thursday. There it is. Okay, so it had 8 trades, and it's that is the max drawdown, and that is the 1,800 net profit. So we have to subtract, it's, let's say, $5, $40 from that. So 1,760 is what the net profit would have been. And again, we have accounted for slippage. Okay, so as you mess with these numbers, let's take a look, okay, at the chart as to see what happened. Okay, let's just go here. So it started looking for trades. Let me zoom this for you. More. Okay, well, let's do more. Okay, so it went short here. It hit the profit target, which is on a volatile day, 150, not a lot, but hey, let's say you want it to be tight with the RR setup. So that trade was profitable. That one hit the profit target. That's the second trade. It hit the profit target. The third trade took a loss of 30 ticks. Now, ultimately, the direction, as you can see, it entered short, would have been correct, but we have a 30 tick stop here. That got taken out pretty quickly. Here you have this. Notice it's green. Let me zoom in more. It's, oops. So we have that's a profitable trade, but look at what happened. 11,277, 11,276.25. All right. What was our break even? 5. So break even plus 5. What's our slippage? 2. Subtract that, you get your 3 difference there. So that 0.75 difference, that 3 tick difference that you're seeing, that's what that is. What happened there is because we were profitable by more than 10 ticks in this example, so 10 ticks or more, it moved the stop from that 30 ticks to right there, and that's it. And it grabbed it. Okay, so that's what happened with that trade. Let's go further down. That is another short trade it entered. It hit the profit target again. That is another break-even example right here. That's also profitable. This one is a stop loss. That's a stop loss being taken out. And we just had 2 consecutive losses in a row. Okay, so this loss were 2 consecutive losses. What did we tell the system? We told the system, if you experience 2 consecutive losses, stop looking for further trades. Okay, and so that's what happened here. We had 2 consecutive losses. We did have a loss before, but it was not 2 consecutive losses. Yeah, that we had that loss. Actually, excuse me, we didn't have a loss before. I thought we did. Nope, there were no losses. So the first, I thought we had a loss somewhere here. We did. Actually, we did. I was right. Okay, there it is. So that's the stop loss right there. But that was only 1 loss. The next one was a win. So the system keeps looking for trades because it's not 2 consecutive losses. And when it got that second consecutive loss, 1, 2, that was it. It stopped looking for trades, and those are the hypothetical results that we ended up with. So I hope this has been helpful, guys. If you have any questions, let me know. I'd prefer to explain this and break it down in further details, not just this strategy, special operations, but all 3 of these strategies. All of them are excellent. I introduced special operations in version 4, and I received, thankfully, many compliments on that. And then accumulation breakout is new in version 5. This is also excellent. I've received excellent feedback on this, but it's fairly new, so this one has more feedback than this. But this has also been positive. This has been around for a while now, since the first version. So that's been doing very well. They all have their right time to use it in the market based on your discretion, and it's pretty easy, in my opinion, to figure out when to use it. Okay, and I'd be happy to explain that during the demo. You can request a demo at pinnaclequant.com. Just fill out the form. We'll schedule something, and you'll get a Zoom invite, and in that invite I will dissect this thing for you. Okay, we will go through it with a fine-tooth comb and answer all your questions, and you can see this live, and we'll run this back test going back several years, specifically for this main strategy, historical and current PA. That is the main strategy. Remember, special operations, you're supposed to use it when you get the opportunity to use it. You will get more opportunity to use this. Okay. so than you would for special operations. So we can run extensive long-term back tests, and over, like, we'll do 1,000 trade back tests so that you get an idea as to, a good idea as to how this thing works. Okay, this is a very unique strategy, and it is a unique algorithm that has taken me 7 years to put together, okay, altogether, to get it to finally to version 5. Hope this has been helpful. Until we meet, take care and God bless.